Hello, my name's Charles Delastic. I'm the Managing Director of Blue Bond Tax Planning. We've been helping clients avoid inheritance tax for more than 18 years. And this video is around how the residential nil rate band works. Okay, so the residential nil rate band is an additional allowance which was put into place a few years ago, and to be honest, it's unnecessarily complex. Some cynics would even say that it's been made very complex to avoid people claiming it. But effectively, it's an allowance which is currently at £175,000 per person who owns a main residence in the UK that they pass to direct descendants, so children, grandchildren and adopted children. So you pass it to your brother or sister, no go, you don't get it, it's only direct descendants. Now you can transfer that allowance to your spouse on death, and if that allowance grows over time, then effectively you get the increased allowance. And very, very simply, it's just an additional allowance for inheritance tax. So you get the on a married couple, you get two normal nil rate bands and then two residential nil rate bands. The normal nil rate band being 325 and the residential nil rate band being 175, so £500,000 per person, which means it adds up to an allowance of £1 million for a married couple. However, there are some interesting things. So if you have an estate that's quite large, and if you believe on the death of the second spouse, the estate is going to be over 2 million, then that's a problem. Because if you transfer your residential nil rate band to your surviving spouse, and his or her estate is going to be over 2 million, the residential nil rate band is reduced by £1 for every £2 over the £2 million. So effectively, if somebody dies with 2,350,000, they lose one residential nil rate band. Worst case, if their estate and they die is below 2.7 million, then they would lose both residential nil rate bands. And the problem is because of the transfer. So normally when we're in that situation and we're setting up estate planning structures for clients, we utilize something called an immediate post-death interest trust. And on the first death, the first residential nil rate band is not passed to the surviving spouse. It's passed into an immediate post-death interest trust and effectively held and banked. Now, because it's claimed at that point, it's not passed on to the surviving spouse. So if she died with more than 2.7 million, you wouldn't lose that second nil rate band, thus saving effectively £70,000 worth of tax just for a small additional trust being put into place. Another anomaly is that, interestingly, if you've died and your previous spouse left you her allowance plus her residential nil rate band allowance, you've got 3 allowances in a married couple, which means it can go up to 1.5 million. Again, that requires some quite careful planning with the use of trusts and how it's set up. But if you want some help and advice on how to do that, then we do offer a free online meeting. Give us a call and we can arrange that for you. So, as I say, these things are unusual anomalies around the residential nil rate band, but certainly worth looking at for couples who it affects. Okay, thanks for listening and bye for now. Bye.